Insurance getting interesting in California. The Hartford is the latest insurer to cut back its offerings in the Golden State, joining a growing list of firms to do so, including Farmers, Allstate, State Farm, and USAA. But joining me here on set to discuss California, to discuss the consumer, and so much more, the Hartford CEO and Chairman Chris Swift. Chris, it's great to have you here. Welcome.
It's great to be here. Thank you for inviting me.
I want to get to California. I want to get to a couple of things. But first, in a week and on a day where we saw CPI revisions, and we know things like auto insurance premiums have continued to grow, what is your outlook for inflation, or maybe I should say disinflation this year from your vantage point?
Sure. You know, what I would say from a larger economic perspective is one thing, and I think there is a subtext on particularly auto inflation that affects insurance premiums. But generally, I think we're pretty encouraged that the Fed's fight to lower inflation is occurring. Whatever metric you want to choose to look at, it's headed in the right direction, and I think it will get better in 2024. I don't think the Fed's going to cut until the second half of the year. They're going to continue to be disciplined in their approach, which is probably a good thing for long term. So we're quite constructive on the macroeconomic outlook, and when the economy does better, the Hartford does better. We insure more exposures. There's more employees, working, and that's all good for our premium base and ultimately our margins.
Yeah, and of course, you do have auto, you do have homeowners, you do have commercial. You're also offering workplace benefits. Soft landing, do you think that's in the cards this year? Yeah,
I really do. I'm fairly sanguine on the environment and what we can manage to. And actually, on our fourth quarter call, I was pretty bullish about our ability to grow and produce consistent margins, which are at all-time highs. I think the inflation question, though, on the auto side, if I didn't answer it, is it's disconnected from broad-based inflation because there's been much more used car pricing pressure. There's much more labor pressure in auto repair shops these days. There is, some pressure from litigation in the field of just who's at fault. So, but we see that pressure actually starting to come down, and again, we think we'll trail, in 2024. But from a consumer side, I would still expect premiums to be elevated, compared to history.
Okay. Personal lines, speaking of your recent earnings, premium growth, 9% last quarter. Autos is part of it. Homeowners is another part of it. We did just tease it. What we've seen in places like California, where you've had wildfires, you've had floods even just this past week, you've had some natural disasters and weather-related risks, but you've also had a regulatory environment that hasn't necessarily been the friendliest to the insurance industry, is my understanding. Your thoughts on and how you're thinking about business in that state, and whether it's a situation that you're considering in other states as well.
Sure. California is a big, important state. Economically, we sell all our products there, whether it be commercial, personal lines, benefits, even our mutual fund business. So we want to be in California, given the size and scale of it. The unfortunate decision that we had to take because we weren't earning an adequate return on our homeowners business, we are pausing new homeowners business. We're renewing our existing customers, but we're pausing it. And it's really because of the environment. It's a complex environment from a regulatory side, and we just didn't feel we can earn a risk-adjusted return on the capital we would allocate. And we're really encouraged, that the governor, the insurance commissioner, are really getting serious about reform so that we have regulatory reform along with adequate pricing, and then we'll come back into the market.
Okay. I do want to talk about commercial lines, which speaks to businesses and specifically small business and the role that's playing as that part of your business continues to grow too.
Well, I would say small business for us is the crown jewel of the firm. It's a business that we've created 40 years ago. We've sort of perfected. We've grown it to $5 billion of premium. Margins are stellar, and it's our growth and profit engine, going forward. So we know the segment very well. And principally because we have the products, that people really want. We're easy to do business with, and we're accurate. We say what we're going to do, and we don't take a lot of people's time. So small commercial will continue to grow for us. And all the outside sources of data that we have, small business formation is still positive. NFIB, says things are growing. If you look at the ADP data on wage growth, for small businesses, it's all positive. So we think it's a big, important segment to our economy, and we're glad to support it.